Risk management strategies don't just concern risk reward ratios, they also concern your position size. Everyone's position sizes are going to be different, and it's all going to be dependent on the size of your account. But regardless of the size of your account, you need to trade the I don't care size. The I don't care size is I don't care if I lose this amount of money. That's what it is in a nutshell. But let me get into it in these slides. So trading the I don't care position size. There are emotions that come with trading in any capacity due to the risk that's involved with each individual position that's taken. Everyone's account size will be different, so there isn't one perfect position size to take. Trading small allows you to respect your original stop loss. I'm going to give you an example of this, and I'm going to have to go back to the risk management slides to show you. So this is an example of a 2-to-1 risk reward ratio trade. You're risking, in this case, you're risking around 130, right? That's just 130 points though. That's just 130 of these points for the Dow Jones, because this is the Dow Jones. But these 130 points that I'm talking about are just on the chart. Whatever position size you take is going to decide how much money you make within or lose within these 130 points, right? Or 262 points. Because of this. So you got to trade small enough to where a move like this in this direction, regardless of the position size that you take, is small enough to where you're like, I don't care if I lose this money. I obviously want to make money, but I don't care if I lose this money. Because if I do, I'll live to fight another day. That's the I don't care position size. Continuing on, it is recommended to take a position size that is small enough so that even if you lose on that specific trade, it won't mentally affect you going forward and or cause you to potentially close a trade early. And this is a factor that normally affects people whenever they are trading with a larger position size. Whenever you take a loss on a position size that's pretty large for your account, it's going to affect you. Like it's going to affect you mentally for the rest of the day at least. And it can be hard to recover from that if you are trading with significant size. But if you're trading with a small size, even if you do take a loss, you don't care because you're trading the I don't care position size. You can take a loss and you're like, all right, it is what it is. On to the next one. When you have a mentality like that, when you're not mentally affected by the losses that you take, that is when you create an environment for yourself to be successful in trading. When you're not trading with the I don't care position size and you're trading with a fairly significant position size, like I said, it's going to hurt you if you lose that type of money. So you just got to trade small, man. You got to trade small. It sucks at first because you won't be making the type of money that you want to be making, but you will be able to get the foundations of trading down and you'll be able to get like, all right, this is how the trade's supposed to move. You'll also be able to keep your emotions in check because you're not worried about necessarily how much money you make within the trade. You're worried about the chart. You're worried about the trade like playing out the way that you want it to. So that's another benefit of trading the I don't care position size. But continuing on, when you trade with significant size, or at least a position size that is significant to your account, it may cause you to close the trade earlier than you had originally planned to close. And I'm going to give you an example by going back to this risk management slide. So let's say in this case, you had a position size that was larger than what you wanted, larger than the I don't care size, right? And you entered right here, right? Price is going up, going up. You get into this trading range action, right? Where it's just bouncing, bouncing, and trying to create a triangle, right? And at this point, you're like, price can go up, it can go down, but you're like, I already took a position size that's bigger than I wanted to initially, and like I just want to get out. I just want to get out. So instead of respecting your exit point right here, which would be a 2-to-1 risk reward ratio, you end up getting out right here, right? There's nothing wrong with that. You made profit. That's good. But you would have been able to make more and you would have been able to stick to your rules if you had not taken such of a big size of a position. And that's what I mean by just letting the chart play out and letting your emotions, like keeping your emotions in check. Because if your emotions are not in check and you're seeing this happen, you're going to be like, I got to get out. I got to get out. And you're going to get out. But if your emotions are in check and you're like, this is my take profit point, I'm not going to get out until my take profit point gets hit. Or if I break even on the trade, then I break even on the trade. But regardless, I'm either waiting till here or waiting till here. It's easier to do that with an I don't care position size versus a larger position size. Because remember, there's no guarantee that you're going to make money on any trade. There's no guarantee at all. You hope, obviously, and you want to be good enough, you will be good enough in the future to be able to make money on a vast majority of your trades. But you're not going to win on every single one. You're going to take losses. You do not want those losses to be so significant that you're like paralyzed from trading and you're like, I can't get in anymore because this size is too big and I just don't know what to do anymore. Like I'm telling you, when you trade with a big size, that is what can happen. But when you trade with a small size, everything is a lot easier to manage. Continuing on with the slide. So this creates situations where you may have a position that is in drawdown or unrealized loss. And because you see the trade going against you, you're worrying about the money that you are potentially about to lose. So we're going to go back to this example again. Being in drawdown, it would be down here in the red. This would be unrealized loss until you hit the bottom or your stop loss point, and that would be a realized loss. Anytime that price is going against you and you're like down in your account, you're negative in your account on that position at least, then you're in drawdown. Drawdown itself, I mean, yeah, it's bad because you're losing money, but it's unrealized because this is your ultimate execution point of I'm getting out of the trade. Anytime during this, you're still in the trade, it's just an unrealized loss. And I mean, in this example, it was down for around 10 minutes and then it blasted up higher, right? So you were in drawdown for 10 minutes and then you were in profit. So that's the goal. You never want to be in drawdown. Being in drawdown sucks, but it's a part of trading. You're going to be in drawdown at some point. It's easier to handle those times of being in drawdown when you have the I don't care size versus having a significant size and you're like, damn, I'm down and I've just lost however much money. I should have risked less. And that's why I'm talking about here, where you're worrying about the money that you are potentially about to lose. Okay? If you didn't have to worry about the money that you're currently risking, you'd be more apt to letting the trade play out. And the drawdown that you were in could potentially turn into profit and hit either your original take profit point or at least your break even point. So let's go back to that other example. This is your entry point, right? So we were in drawdown for around 10 minutes, then we blasted up and now we're in profit. And we're in profit. This is your take profit point, right? So if price from this point right here, if price ended up going down lower, this would be your break even point. And if you moved your stop loss up, you'd get executed out here. Or you let the trade play out like it did in this case, and you would hit your take profit point and you'd make profit. The point with all this is that trading the I don't care size allows you to do this, enter right here and exit right here a lot easier, because you get in with an initial like bias, you get in with an initial idea and you're like, all right, I believe that this is going to happen. Boom, execute. Continuing on, once again, the I don't care size will be different for each and every person, regardless of the account size. Risking between 0.5% and 2.5% of the account per day can help you stay disciplined and not worry about losing too much. I want you to pay attention to these numbers and the per day, okay? Because you'll hear some people say, you never want to risk more than 1% on a trade. Okay, you can risk 1% on a trade, and that's, I mean, you'd have to lose 100 trades in a row to like lose that account, to blow that account, right? But if you're taking 3 trades a day or 5 trades a day or 10 trades a day, you know what I mean? You're losing anywhere from 3%, 5%, or potentially 10% of your account in a whole day. And I've been that type of trader, and I'm telling you, like, it can be frustrating when you're doing that. But you can also make a lot of money really quickly if you are risking that much. So, you know, there's pros and cons to that. When you max out the amount of money that you want to risk per day at around 2.5%, that would mean that you'd have to lose 40 days in a row before your account was blown, right? So if you were risking 2.5% of an account, doesn't matter what size account that you have. You could have $1,000 account, or you could have $1 million account, or $100,000 account. Regardless, if you're risking 2.5% of that account per day, you'd have to lose 40 days in a row for you to lose all your money. If you're risking 2% of the account per day, you'd have to lose 50 days in a row for you to lose all your money. If you're risking 1.5% of the account per day, you'd have to lose 67 days in a row. If you're losing 1% per day of the account, then you'd have to lose 100 days in a row. And if you're risking 0.5% of the account per day, you'd have to lose 200 days in a row before you lost all the money. Longevity is the name of the game, right? You want to be able to last as long as possible in the market. The way you last long is not risking a significant amount of your capital in one specific trade, because at any point in time, the market can go against you. That's why you have to limit your risk and employ risk management strategies. You may be saying to yourself, there's no way I'm only going to be risking 0.5% of the account per day. That's for you to decide. That's not for me to decide. I'm just telling you, if you were to only risk this much per day, so let's just say you took 5 losses throughout the day, but those 5 losses only added up to about 0.5% of your account that you lost in that day, right? You'd have to lose 200 days in a row like that. That's almost a whole trading year. There's like 252 trading days in a year. So that's almost a whole year of losing. Like, you're not going to do that. You shouldn't be losing 200 days in a row. I'll put it to you that way. That's why I've included these numbers up here. Most of the books that you read, and like most of the traditional stock market people that you learn from, they're going to tell you shouldn't be risking anywhere from 1% to 2%. Like, you shouldn't be risking more than that of your account on any single trade. You can do that. I've just extended that out to, instead of just being on one trade, I just do that percentage of the account for the whole day. I get into examples of these percentages in the next slide, so let's go there. I got two things to mention real quick. Number one, I am releasing the full course that this video is a part of. The full candlestick price action trading course is on YouTube right now. It's over 18 hours of free trading game. There are so many golden nuggets in this course, you're not even going to believe that it's free. But I believe this information is so valuable and so helpful for everybody. I just want it out there, honestly. I truly feel like everybody has the potential to benefit off this information, because if you can read a chart, then you can profit off of it if you know how to read it with the candlesticks. And this information that I'm giving you guys, it can be used to trade on any sort of candlestick chart, right? Whether it's Apple's candlestick chart or Tesla's or gold's candlestick chart or Bitcoin's or XRP's or euro versus the dollar or British pound versus the dollar, other stock markets around the world. It doesn't matter. If there's a candlestick chart, you will have a severe edge in reading it. I truly believe that with dedicated time and practice, anybody can become successful in trading. Anybody, like a grandma can literally do it. It just takes a lot of time and effort to learn how to do it. But understanding candlestick price action will severely help your trading journey. It severely helped my trading journey. I literally learned it, and a month after I learned candlestick trading, I became profitable. I passed my first prop firm account. So that is how impactful this information is. And I'm giving it to you for free. A lot of it. The second thing I want to mention is I am releasing amazing workout programs. As I've told you guys before, I am a certified personal trainer and a certified nutrition coach, but I've also been going to school for personal training. And shout out to my instructor, Paul, because he's given me hella golden nuggets throughout my whole journey in school. Because of that journey, I now have workout programs that can positively benefit everybody. And I mean it, like, let me explain. I have a full body muscle building program, aka a hypertrophy program. I have a fat loss program, so if you want to lose 20 pounds, you get on that program. I've got a core program that'll help you develop a six-pack like this. And I got a booty building program if you're trying to get your Kim K on. And they all incorporate a little bit of cardio, because that's also very much needed in everybody's life as well. I'm also providing nutrition guides. I'm also providing recovery guides. And this is just the beginning. It's only going to grow from here. I already know how impactful it's going to be for other people because of how impactful it was for me. Because look at this picture of me from last summer and look at this picture of me from now. This progress was specifically from my muscle building and full body workout program. One of the beauties about working out and being active is it does not matter what age you are. You honestly have to do it. You need to be active. So anybody can work out with these programs. As long as you are medically cleared to work out, these programs have the tremendous potential to positively impact your life. And I'm so serious when I say this. The number one thing that you must always remember throughout both programs, whether it's the trading program or whether it's the workout programs, you must always believe in yourself and your abilities and your ability to achieve any outcome that you want, okay? Because you absolutely can, but it's going to take time, and you need to understand that it's going to take time. But if you dedicate the time, the effort, and the dedication to doing it, eventually it's going to happen. So don't stop. Do not give up on yourself. I believe in you. You got to believe in you too, okay? And you do it with this, and you do it with this. I believe. I want to end this video by letting you know that you are worth it. You are beautiful. You are absolutely everything that you want and need to be. It's already there. You already have it. You just have to realize it. That's really all it is. And always remember, regardless of what you look like, you are beautiful and you are created in God's image. And God is perfect. He doesn't do no wrong. So you are perfect. You just have to realize that perfectness within you. Or another way to say it is, you have to understand the confidence and the power that you have within you. My goal is to awaken that confidence and that power within you, because you truly have the power of the universe within you. You have the power of God within you. You got to understand it, man. You are one with the creator. You are a creator. So let me help you create the life that you want to create. Let's do it together. So go check out infinityian.com. Everything that you need is going to be there. And I hope to see you there. I love you guys. God bless you. And I'll see you guys in the next video. Whoosh.